If you've been paying attention to the news, the chances of us having a recession are getting higher and higher every single day. But what does a recession mean for Los Angeles home prices? Are we going to have a crash like we did in 2008, or are home prices going to stay steady? Well, the answer might surprise you. In this video, I'm going to dive into how recessions impact the Los Angeles housing market, what history tells us, and how you can navigate these changes, whether you're a buyer or a seller or an investor. There's a ton of really good information here. So let's start by looking back at history. Did you know that not all recessions lead to home price declines? In fact, 4 out of the last 6 recessions before 2008, home prices actually went up nationally. But Los Angeles is a different beast. I say that all the time on this channel, and recessions hit LA a lot harder. Let's take the early 1990s recession, for example. Los Angeles home prices dropped over 20% between 1990 and 1996. Why? Because defense industry cuts hit the local economy really hard and job losses were massive. It took years for prices to recover. And then you have the Great Recession of 2008, which I still have PTSD from because I was a real estate agent in Las Vegas, the epicenter of the home foreclosure crisis. And it was brutal there, but it was pretty bad here in Los Angeles as well. Home values in LA fell 37% over 4 years. But here's the thing. Those people who held onto those property long-term saw those values bounce back and then more, especially during the pandemic. The one historical takeaway is recessions do bring some short-term challenges, but LA real estate has proven time and time again that it is resilient in the long run. For the city of LA, the median sales price is $1,060,000 as of February of this year, which is up 9% from the year before. Now, sales volume is also slowing compared to last year. Why is this happening? Well, there are 3 major factors. The rising home insurance cost is one of them, especially in high fire zones like Malibu and Topanga Canyon. And this is exacerbated by the Palisades fire and the Eaton fire. Then you have interest rates. I don't know if you've been paying attention over the last week for interest rates, but as of last Friday, they went down to 6.5%, which is amazing. And then today at the filming, they're at 7.1%. It has been a roller coaster. And if you've been paying attention, you're going to get whiplash because it is all over the place. And a lot of buyers are on the sidelines because these interest rates are just way, way too high. The third factor is lower inventory in certain neighborhoods. Some of these sellers still have 3-4% interest rates and they are not selling for anything. So we're seeing a lack of options for some areas in the Los Angeles market. So we're not seeing crazy price drops like 2008, but we are seeing buyers and sellers feeling a little bit more cautious. So here's what typically happens during a recession. Now, you'll probably see home prices dip, but not always dramatically unless there's an oversupply of housing, which we do not have, or there's a major economic shock like 2008. Wait, what was that? Did you say tariffs? Oh, yes. Tariffs. Now, we have no idea what is actually going to happen with tariffs, but when they were implemented, the stock market reacted really dramatically. And that was one of the reasons why interest rates shot up, because a lot of the bond market was freaking out. So we don't know if this is going to be our one economic downturn or economic event that is going to trigger a recession, but looks like it could. Also, during a recession, sales activity slow as both buyers and sellers hesitate because they're just not sure of what's going to happen. And unfortunately, luxury properties tend to take the biggest hit because fewer people are buying multi-million-dollar homes during tough times. But there is a silver lining that recessions often lead to lower mortgage rates because the feds are trying to stimulate the economy. That means buyers who are financially ready can actually get great deals during downturns. So what does all this mean for you? Now, for buyers, recessions can be amazing times to buy if you're financially ready. There's less competition. That means more negotiating powers with sellers, and lower mortgage rates can make homes a little bit more affordable. Now, I say affordable in Los Angeles because it's still ridiculously expensive here. Now, for sellers, if you need to sell during a recession, pricing your home competitively is absolutely key. Buyers are super nervous during downtimes, so make sure that your property stands out with incredible staging and fantastic marketing. If you need to know what your home is worth right now, just click on the link down below and schedule time to chat with me. I'd be more than happy to give you a free competitive market analysis. And for investors, recessions are prime time for savvy investors. Look for distressed properties or homes with strong cash flow potential. You'll often find great deals that pay off big in the long run. There you have it. The Los Angeles housing market during recession isn't all doom and gloom, but history shows us that while there may be some short-term challenges, LA real estate has incredible long-term resilience. So tell me, what do you think about buying or selling during recession? Drop your thoughts in the comments down below. I'd love to hear your perspective. And if you found this helpful, make sure you hit the like button and subscribe for more real estate tips and insights. Thanks for watching. My name is Felipe Crook with eXp Realty, investing in your dreams.